Welcome to UXL, where you can learn new skills anytime and anywhere. Visit uxl.com to explore our full course selection. This lesson is part of a larger course. Check the video description below for a link to the full course where you can enroll. If you enjoy our content, please like and subscribe. For your convenience, the course cover displayed on your screen provides the complete course title and lesson title. Let's proceed with the lesson. Lesson: Supply and Demand Fundamentals. Supply and demand are fundamental concepts in economics and serve as the bedrock for understanding market dynamics. These principles are instrumental in determining the pricing and quantity of goods and services in a marketplace. The interplay between supply and demand shapes the economic landscape, influencing business strategies, consumer behavior, and competitive intelligence. This lesson delves into the essentials of supply and demand, elucidating their roles within the broader context of market analysis. At its core, the law of demand states that all else being equal, as the price of a good or service decreases, the quantity demanded increases, and vice versa. This relationship is typically represented by a downward-sloping demand curve on a graph, where the y-axis reflects price and the x-axis reflects quantity. Several factors can shift the demand curve, including changes in consumer income, tastes and preferences, the prices of related goods, and expectations about future prices. For instance, if consumer incomes rise, the demand for normal goods will typically increase, shifting the demand curve to the right. Conversely, the law of supply posits that all else being equal, as the price of a good or service increases, the quantity supplied increases, and vice versa. This relationship is depicted by an upward-sloping supply curve on a graph. Factors that can shift the supply curve include changes in production technology, input prices, the number of sellers, and expectations about future prices. Technological advancements, for example, can reduce production costs and increase supply, shifting the supply curve to the right. The equilibrium price, also known as the market clearing price, is determined at the intersection of the supply and demand curves. At this point, the quantity of goods supplied equals the quantity demanded. When the market is in equilibrium, there is no tendency for the price to change, as the desires of consumers and producers are perfectly balanced. Any deviation from this equilibrium creates a surplus or a shortage. A surplus occurs when the price is above the equilibrium, leading to excess supply. Conversely, a shortage arises when the price is below the equilibrium, leading to excess demand. A practical example of supply and demand dynamics can be observed in the housing market. During the 2008 financial crisis, the housing market experienced a significant downturn. The demand for homes plummeted due to a combination of factors, including rising unemployment rates and tighter credit conditions. Simultaneously, the supply of homes remained relatively constant, leading to a substantial surplus and a decline in home prices. This scenario illustrates how shifts in demand, with a relatively inelastic supply, can lead to significant changes in market equilibrium. Elasticity is another crucial concept related to supply and demand. Price elasticity of demand measures the responsiveness of the quantity demanded to a change in price. If a small change in price leads to a significant change in the quantity demanded, the demand is considered elastic. Conversely, if the quantity demanded changes little with a change in price, the demand is inelastic. Factors influencing elasticity include the availability of substitutes, the proportion of income spent on the good, and the time horizon considered. For example, luxury goods, such as high-end electronics, often exhibit elastic demand because consumers can delay purchases or choose alternative products if prices rise. Similarly, price elasticity of supply measures the responsiveness of the quantity supplied to a change in price. Supply can be elastic or inelastic, depending on the production flexibility of the good in question. Goods that require a long time to produce, such as custom-built machinery, typically have inelastic supply because production cannot be quickly increased in response to price changes. On the other hand, goods that can be produced quickly and in large quantities, such as clothing, tend to have elastic supply. Understanding supply and demand extends beyond the theoretical framework. It has practical implications for competitive intelligence and market analysis. Businesses must continuously monitor market conditions and adjust their strategies accordingly. For example, a company might use demand forecasting to predict future sales based on historical data and market trends. This information can guide inventory management, pricing strategies, and marketing efforts. Similarly, understanding the supply side of the market can help businesses anticipate potential disruptions, such as supply chain issues or changes in input costs, and develop contingency plans. Moreover, competitive intelligence involves analyzing the actions of competitors in the context of supply and demand. For instance, if a competitor lowers prices, a company must assess whether the move is likely to increase demand significantly or if the market is relatively price inelastic, in which case the price change might not have a substantial impact. By understanding the elasticity of demand for their products, companies can make informed decisions about pricing, production levels, and market entry or exit. Government policies also play a critical role in influencing supply and demand. For example, subsidies and taxes can alter the supply curve by affecting production costs. A subsidy for renewable energy, for example, can lower production costs and increase the supply of green energy, shifting the supply curve to the right. Similarly, taxes on tobacco products can decrease demand by raising prices, shifting the demand curve to the left. Understanding these policy impacts is essential for companies operating in regulated industries, as it allows them to anticipate changes in market conditions and adjust their strategies accordingly. Additionally, global events can have profound effects on supply and demand dynamics. The COVID-19 pandemic, for instance, caused unprecedented disruptions in both supply and demand across various industries. On the supply side, lockdowns and restrictions led to factory closures and supply chain disruptions, reducing the availability of goods. On the demand side, changes in consumer behavior, such as increased demand for home office equipment and decreased demand for travel-related services, significantly altered market dynamics. Companies had to quickly adapt to these shifts by reevaluating their supply chains, adjusting inventory levels, and pivoting their product offerings to meet changing consumer needs. In conclusion, the fundamentals of supply and demand are essential for understanding market dynamics and conducting effective competitive intelligence and market analysis. These principles explain how prices and quantities of goods and services are determined in a market, influenced by various factors, including consumer preferences, production costs, and external events. By comprehending these concepts, businesses can make informed decisions about pricing, production, and strategic planning. Furthermore, the ability to analyze and anticipate changes in supply and demand allows companies to remain competitive in an ever-evolving market landscape. The insights gained from studying supply and demand are invaluable for navigating the complexities of the modern economy and achieving long-term success. This concludes the lesson. We trust you found this video informative and engaging. To enroll in the complete course, please use the link provided in the description below. At UExcel, we are committed to your learning journey. Each course offers a certificate of completion, online support, and downloadable resource files to enhance your experience. If you found our content valuable, we invite you to like this video and subscribe to our channel. Thank you for joining us, and we look forward to supporting your continued pursuit of knowledge.